is a follow-up on the DraftKings Penn stuff. We talked a lot about this yesterday. We wrote a couple notes, but just want to clarify, two things can be true, right? This could be a good deal for Penn, at least vis-a-vis where they were prior to this deal. And it also may not have much of an impact on DraftKings, and that's what we believe. And just some context here, the stock DraftKings was down $10, right, which is way excessive. So Flutter, which owns FanDuel, was down 3.5%. Like the combined market cap of those two companies that was lost yesterday was like $2.5 billion or $3 billion, something like that. And the amount gained by Penn was, $400 million, right? So, the question is like this really that value destructing? And we don't think it is, obviously. I mean, you're talking about additional marketing expenditures that are maybe, 10 to 15% increase from what we expect them to be next year, right? So that's for the industry. So not that big of a deal. We don't think this sparks like a huge market share or marketing campaign. And in fact, we actually think the market share at risk, because we do expect Penn to gain market share, but the market share at risk is probably not from DraftKings for a variety of reasons that we've laid out. And the other thing about this deal is, you have to remember, everybody had talked to ESPN, and Bob Iger actually said in an interview last night after they reported earnings that Penn had by far the best offer. So this really went to the highest bidder. All right. So, it wasn't like it was some kind of coup by Penn. I think they needed it more than anybody else. And then finally, one of the things that probably hit DraftKings stock a lot yesterday, which we heard from investors, was that since Disney owns 4% of DraftKings, that there'd be an overhang that because Disney would maybe want to sell their stake of 4%. So that was, coming, a big block sale to pressure the stock was coming. Well, Disney disclosed in their 10Q that they'd already sold it during the quarter. So it's gone. It's not an overhang anymore. So really, it's about the competitive environment coming up, and we're firmly in the camp that, DraftKings, it's just not going to be impacted to the extent that the market thinks. And Penn still has an uphill battle. This is a glorified advertising deal, is really what it is. It's a rebranding and advertising deal. And it's an uphill battle given that the scale and size that DraftKings has, and it's a much more, it's a much bigger market than it was 3 years ago if they'd done this deal at that point. So.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.